Good morning, Fractal Effects team. Before we get started, please make sure you read the disclosure. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. Jump out of the charts in a minute. Today was CPI, so we will be avoiding the indices and just taking a look at US oil. So we have a downside expansion model, we had a sell model, and we've had a double break. We're just waiting for a confirmation. Usually in a double break, the market comes back up, sweeps that liquidity, hits our blue zone, and then drops again. Chart might look a little messy here. I got a lot of zones overlapped. That's just because yesterday with that big spike, after that news drop about the 90-day hold on the tariffs, we left a lot of fair value gaps on a lot of different time frames. So I've just isolated a few as our targets for today. Get rid of this. So no confirmation as of yet. And US oil is the only asset I'm actually interested in taking a look at today. So remember, as soon as you see a double break, that's the dealer revealing their hand. We had a double break during the blue zone session. However, you don't just jump in immediately. You wait for that retracement back to your blue zone. If there's a 15M fair value gap, 15-minute fair value gap, then you see rejection and a clean setup off that. That is one area that you can take the sell off of. It's lower probability. That's why I personally like to avoid it at times, unless I see a ridiculous amount of confluence happening there. So as mentioned before, even though we have a downside expansion model, we have a double break. So if we get a bullish confirmation while oil is trying to make its way back up to the blue zone, then that will conflict with my bias. So we're looking to come back up. So our dealing range high, just going to get rid of these extra fair value gaps just to see exactly where it is. So our dealing range high is actually right here. So if it makes it all the way up here and gives us a bullish confirmation, I'm actually not interested in trading this. And we'll spend the rest of the session actually going over a couple of things. Just wait and watch. We are at the New York fair value gap right here, 20 EMA. So it could push down from here. Let's get rid of this. Just outlined that. There's a big fair value gap right there. This was right before NYC open. So there's your manipulation line. Manipulated down, pulled back up, double break. Now we're waiting for a retracement. If we get a bearish 5M fair value gap and a setup in here, I'm not interested in taking it, but again, we're waiting for confirmation retracement extension now. Today being Thursday, we're aiming for, I believe we've already hit the weekly range. So the weekly range is up here. Again, I'm going to just clean these out just to show you guys. So there's our weekly range. There's the aqua line there and there. But we're going to wait to see which side we get confirmation. Because we did hit the midpoint of this 15-minute fair value gap, the market could technically pull back up. We are leaving bullish fair value gaps. That's why we want to see a bearish fair value gap here to let us know that the market wants to push down. Then we get that bearish confirmation. So we've tapped that 5M fair value gap. One minute, 40 seconds left. And we have to wait for one more candle to print to see if we do indeed have a 5M fair value gap in here. That's another reason why you might want to just avoid trading on days like CPI, PPI, FOMC, non-farm payroll, because you're isolated to one asset. Whereas on any other day, we wait for confirmation across any of the assets that we've set alerts on, and we can jump over there. There's not that much waiting happening in that 1 hour after the range formation, but we're very limited on days like today. We have to be live, and we want to make sure we walk you guys through the strategies, but these are days that you most likely want to just avoid. 4 minutes left. Let's see if this fair value gap stays open and wants to push down from here. Because it is Thursday and our weekly range is above us, we will wait for confirmation. I'm not going to make any early moves. So just got to be patient. So we've closed off that fair value gap. If the market gets above the opening NYC fair value gap here, we could most likely get a bullish confirmation, bounce off of here, head to the blue zone. And there's a possibility of that. Again, it's a sell model until it's not. It's a buy model until it's not. For the most part, it's delivered. We're below. Just a second. We're actually sitting in a higher time frame fair value gap with a 15-minute fair value gap inside that higher time frame fair value gap. So it could technically start pushing up from here. It's delivered majority of its targets to the downside, but that's why we wait for confirmation. So nothing, no foothold there yet. We are closing under the 20. We do have a bullish fair value gap here. Still waiting for confirmation. stalled here. Another fair value gap potentially forming. 2 minutes, 53 seconds left. Let's see if this one stays open. So we did leave a sliver of a fair value gap right here. And we're also reacting off this fair value gap, so they might just engineer new liquidity here. Again, another reason to wait for confirmation. Really is playing both sides right now. Also, I've mentioned this before, I'm not a fan. Rarely will you see a clean wick off of a fair value gap. And then a push, usually it wants to come back and violate it, close above it. But let's see. We're 9 minutes away from 11 o'clock. So we are getting some reaction off that fair value gap here. Ideally, I'd like to see it violate this fair value gap, close below it. I'd like to see it come back up and see if it taps this area. It remains bearish. Or if it just keeps running from here. We're 5 minutes away from 11. With 3 minutes left. This candle close. So either we want to see a bearish confirmation or we want to see a pullback into this 1M fair value gap and then a continuation until we get that bearish confirmation. Again, US oil here that we're looking at today. CPI day, so you want to avoid any other assets, very volatile. We're still waiting for that confirmation. Retracement extension. So we're pulling back up. There's a fair value gap in here. 20 EMA. Just bounce off this and continue down. So we get another 5M fair value gap in here. I'm just going to change the color of this. So we did have an early retracement, so when we do get a confirmation, the market could move quick. Right across the board. That was the that sliver 5M fair value gap that we saw. This is what it looks like on the 1M. Bounced off a bit. Now we're hitting this fair value gap. Let's see. Ideally, we don't want to get over this if this market is going to continue down. So now that we've taken out these highs, we're back at this fair value gap. That's what we didn't want to see. Let's see, unless it immediately rebalances and pushes down from here, we could continue up back up to the NYC fair value gap. And this is why we wait for confirmation, just to avoid all this muddiness back and forth. Look at all this. Look at all these fair value gaps. Now we're back at the NYC fair value gap. As mentioned before, I don't like to see when markets or candles just wick certain zones and then push down. Still a whole bunch of nothing. We're back at the opening fair value gap, 50 EMA. Let's see if we get a confirmation to the upside. If we get a confirmation to the upside, I'm actually not interested. So at the very least, your confirmation has to match up with your model at least. Upside expansion model, bullish confirmation. Downside expansion model, bearish confirmation. It's when you have those mixed models, the contraction model, trumpet model, where you can use other confluence to see that it might be heading in the direction of, or the opposite direction of your bias. But on a day like today, sell model, downside expansion model, sure, as I mentioned before, it has technically delivered to the targets to the downside. But still doesn't mean I want to take a buy if we get a bullish confirmation. Even though today is Thursday, and even though our weekly range, which is what the market is drawn to on Thursdays, is above us, it's already touched it. It's already tapped it. Right here. That's the top of it. There's the bottom of it. And London came all the way through. So it could still get up there, but as mentioned before, that's the kind of manipulation that I'm not comfortable with. These are the days I'd rather pass. I'd rather our weekly range be below us, or we have the upside expansion model and the range be above us. I want these points to match up. The more check marks we get in one specific direction, the better. About 15 minutes left. As mentioned before, if we get that bullish confirmation, we will conclude our session. Get some reaction off the New York fair value gap. About 13 minutes left. Could just consolidate here too. But we are bouncing off that 20. We do have a fair value gap under. Could use this to push up, let's see. About 10 minutes left in our stream. Just stuck right at that New York fair value gap. Engineering new liquidity, people going short from here, people going long from here. I personally don't like to see it get this muddy. When you're sitting in a higher time frame PD array and you're consolidating, market could just push off on either direction, no confirmation yet. Another reason to avoid these days. So again, as far as the engineering of new liquidity, it's bouncing off the 50, bouncing off the 20, NYC fair value gap here, so people going short, 5M fair value gap here, people going long. They're playing both sides. And we might not get our confirmation actually. We got 7 minutes left. That's why we wait for the confirmation though, so we don't get stuck in this. The longer they hold it here, I get the feeling they do want to push up from this higher time frame PD array, but as mentioned before, we might not even get a confirmation for 11:30. So this will be our last 5M candle. Conclude the session right after this. Please make sure you check us out on fractaleffects.com where we teach high probability trading. Make sure you hit the subscribe button, turn on your notifications so you know when we're live. Check us out on Instagram as well, fractal.effects. We're always posting educational material. If you have any questions, you can post them there. Also, if you're new to trading, when you go down to the package section on our home screen, fractaleffects.com, that's effects with an E. We have the link is actually in our YouTube bio. Yeah, if you're new to trading, you can actually get $15 off your next TradingView plan. We've partnered with them. You can just click, whether or not you sign up with us or not, you can just click right in the bottom there with our package deal. I'll say click here for TradingView, and you can actually sign up whether or not you sign up with us or not. So if you don't have a TradingView plan yet, you can get $15 off your next plan. If you're new, obviously just aim for the basic plan. And those are the only two things you really need. TradingView plan and your fractal effects. We've provided everything for you on the back end, regardless of what you're interested in investing. Remember, we don't give investing advice. We show you how to do top-down market analysis. So you can look at any chart and you can do your top-down market analysis and you know exactly what zone it's going to be coming into for a high probability trade setup. You get free access to Market Watch. Again, another third-party application that we've integrated that just does market news. So they're the ones talking to the analysts. They're the ones that are doing all the due diligence to bring you the news. Match that up. See what analysts are saying about a specific stock. Then do top-down market analysis, figure out the best entry, see if it matches up with what their projections are. That's the best way to actually get involved with investing. Meanwhile, on the day-to-day, you follow us, learn the spotlight strategy, learn the blue zone strategy. And this just becomes the icing on the cake. Got about 2 minutes left in our stream. I don't believe we're going to get a confirmation today. Or at least not within our allotted time. Remember, this is a time-based approach. If you don't get your confirmation, if you don't see your high probability trade set up 1 hour after the range formation, you're done. We don't sit there staring at the market all day. We'll come back at 8 o'clock Eastern Standard for the Asia session. Or if you like to trade the London session, come back for that. But only 1 hour at a time. Do not waste your entire day staring, hoping, waiting for a trade setup. That'll also mess with your psychology. Because the longer you sit there watching, the more you feel this need to take a trade. Otherwise you feel like your time's been wasted. So make sure you follow the rules. Just got 1 minute left, then we'll conclude there. We'll be back again next week. We're live Tuesday, Wednesdays, and Thursdays. 10:30 Eastern Standard. 25 seconds left. Looks like it's itching to give us a bullish confirmation. 15 seconds. I doubt we'll get it on this candle. And that's our time. Thanks for joining us. We'll see you guys next week.